Hi everybody, this is Lara with your weekly video for the S&P 500 for the trading week ending Friday 18th of March 2022. On Friday, a new high above 4276.94 invalidates the first two Elliott Wave counts, leaving the third now as the main wave count. And I have a new alternate for you to consider. I'm going to label the main and alternate, and on balance of probability, make a judgment that the main bullish wave count is now more likely. I expect it looks more likely that primary 2 was actually over on the 24th of February, falling short of meeting the definition of a bear market. A target for primary 3 is at 6743. A new short-term target for minor 3 is at 4599. The alternate considers the possibility primary 2 could continue lower, the target for support 3195.28. Elliott Wave analysis first, classic analysis last. I'm redrawing the channel on the weekly chart. This is an adjusted base channel. The lower edge may continue to show where price may find support for deeper pullbacks along the way up, because price will not move in a straight line. This is the March 2020 low. This is the end of cycle wave 4 and the start of cycle wave 5, which is subdividing as an impulse with a long extended primary 1. A shallow double zigzag may now be complete for primary 2. And primary 3 may continue higher. The target for primary 3 is for it to reach just equality in length with primary 1 at 6743, because primary 2 is so very shallow. If primary 2 does continue further, and I do have an alternate allowing for that possibility, it may not move beyond the start of 1 below 2191.86. Let's take a look at this at the daily chart level. The high for primary 1 up here. This point here, primary 2, W, X, Y. This wave count sees this downward movement as a 3 and this downward movement as a 3. And particularly for this movement, that has the best look and best fit. But the S&P doesn't always exhibit great proportion, so my alternate considers those as 5s. We need to consider both. If primary 2 is over there, then primary 3 has begun, and primary 3 may only subdivide as an impulse, which will be labelled intermediate 1, 2, 3, 4, 5, and the structure has to meet all of those Elliott wave rules for a simple 5-wave impulse. Within intermediate wave 1, this also may be subdividing as an impulse, minor 1, 2, 3, 4, 5. The target for minor 3 is for it to reach a common Fibonacci ratio to minor 1 at 4599. Within minor 3, minute 1 and 2 may be complete, minute 3 may end next week, minute 4 should remain above wave 1 price territory, and then minute 5 should move beyond the end of 3. When minor 3 is over, minor 4 may not move into minor 1 price territory. Eventually, when intermediate 1 is over, intermediate 2 may not move beyond the start of 1, below 4116.06. At the hourly chart level, here is the end of primary 2 and the start of primary 3, with minor 1 an impulse, minor 2 an expanded flat, minor 3 may only subdivide as an impulse, with minute 1 and 2 complete, minute 3 nearing an end, minute 4 may not move into minute 1 price territory next week below 4276.94. When minute 3 and 4 are over, I will add to the target calculation, which I've got at the daily chart, for minor 3 at minute degree. So at that stage it may widen to a small zone or it may change. And the target for primary 3, the same as at the daily chart level, 6743. At the daily chart level, this is a new alternate. At the weekly chart level, both wave counts see primary 1 over here, and now let's consider the possibility that primary 2 may not be over here and it could continue lower as a double zigzag or a flat. If it's a double zigzag, it'll be labelled W, X, Y, and W may subdivide as a zigzag, 5, 3, 5. Now this wave count sees this downward movement as a 5-wave structure. That's possible, it'll fit at lower time frames, but it does have a better look as a 3. This downward movement also has to see this as a 5-wave structure. Again, it's possible, but it has a better fit at all time frames as a 3. But let's consider both possibilities. The problems in terms of Elliott Wave also reduce the probability of this alternate, and classic analysis is now offering some more support to a bullish wave count than bearish at the end of this week. We'll get to those charts next. If there's a zigzag over here, it could be wave W, the first zigzag in a double. The double may be joined by an X in the opposite direction, which may have found resistance about the upper edge of this channel on Friday, and then Y may continue lower to bring primary 2 closer to the 0.618 Fibonacci ratio of primary 1, which is at 3195.28. Primary 2 could also continue sideways and lower as a flat correction. We could label this intermediate A, B to continue higher, and I've given you the price point where B needs to reach 90% the length of A in the text article, so it needs to move higher, and then C to move beyond the end of A to avoid a truncation. If primary 2 is a flat, A, B, C, then B may make a new high beyond the start of A, as in an expanded flat. Unfortunately, there is no upper invalidation point for this alternate, which means there's no price point above which we can have real confidence in that main Elliott wave count, the bullish Elliott wave count. I'm going to have to use classic analysis to guide which of the two is more likely, including Lowry's data. At the daily chart level, we're looking at X, A, B, C. Subdivides the same as 1, 2, 3. The degrees are different, but the subdivisions overall are pretty much the same. X could be over at Friday's high. Y could begin downward on Monday if price is going to find resistance pretty much at the upper edge of this channel. Okay. How is the situation looking at the end of the week? At the weekly chart level, there's a huge bullish engulfing candlestick pattern. It doesn't have support from volume, despite Friday being an options expiry date and having stronger upward volume for Friday, but volume is pretty heavy compared to the prior downward week. So in order to say that this candlestick has support from volume, it should have stronger volume than the prior candlestick. It doesn't, but volume is still relatively heavy compared to recent weeks, so possibly a little support. This potential head and shoulders pattern never completed. Price never properly broke below the lower edge of the neckline. Well, depending on whose definition you read. If you read McGee, price needs to close 3% of market value below the neckline. Kirkpatrick and Dahlquist don't define it really either way, so for them I'd take a more standard simple close below the neckline, but I think I'm going to use my own definition, which means at least one full daily candlestick below and not touching of downward movement, and we never got that. Now what we've got is a strong bounce around about this neckline with strong upward movement. This bullish candlestick pattern supports a bullish Elliott wave count, and here at this low here also a bullish candlestick pattern with a very bullish long lower wick on this hammer. So we've got now two bullish candlestick patterns at this low and this low that supports a bullish Elliott wave count, and the fact that the head and shoulders pattern never completed also supports a bullish Elliott wave count now after this upward movement this week. Look out for resistance on the way up, 4545, above that about 4800. I've adjusted the on-balance volume support line. It remains above support. It's in a small zone. The previous signal last week is negated. I had on-balance volume moving below a support line, but then it's moved back above this week. When it does that, you need to redraw the line, so that's what I've done. No signal this week from on-balance volume. RSI in neutral territory, ADX still indicating a downward trend. It's a lagging indicator here based on a 14-week average. Stochastics neutral, and ATR increasing as price falls and increasing this week as price rises. So there's some strength in this upward movement this week. At the daily chart level, 1, 2, 3 white soldiers for these three candlesticks. This is a bullish candlestick reversal pattern. We've also got one down here at this low in a piercing pattern and one here in a hammer. So with bullish candlestick reversal patterns at these three lows, that supports the view that we may have a sustainable low in place down here. Upward movement for Friday shows a strong increase in volume, but this was an options expiry date. But still, volume is supporting upward movement. Look out for support about 4425, and then below that 4375. Resistance about 4550, 4625 and 4725. I've changed my 55-day moving average to a 50-day moving average so that we can see the signal a little bit more clearly. This is a death cross, this is bearish and would tend to support the alternate Elliott Wave count, but there's not a lot of other support for the alternate Elliott Wave count. ADX tells us at the daily chart level there's a potential trend change to up, but as yet no clear trend is indicated. RSI exhibits some bullish divergence with price at these lows, some support for a bullish Elliott Wave count. It's in neutral territory. If the black ADX line turns up, an upward trend would be indicated, and there's plenty of room for it to go before it could become extreme. ATR slightly increases as price falls with normal behaviour, stochastics entering overboard. Now when we look at the AD line and inverted VIX, at the weekly chart level, no signal here from the AD line this week. There is still this short-term bearish divergence that supports the alternate Elliott Wave count, and that's one reason I'm providing it for you. There is a little bit of support for that, this from the AD line and that death cross. At the daily chart level, price and the AD line moving higher, this short-term bearish divergence has been negated, or not negated, but it's considered to have failed for this upward movement here. Following two more upward sessions, it's no longer evident. There is still bearish divergence between these lows, between price and the AD line. Here, breadth was falling faster than price. That's bearish for price. That does still exist and does still support the alternate Elliott Wave count. Between price and inverted VIX, they're both moving higher this week. No new short-term divergence. VVIX and VIX are both moving lower. VVIX has made a new mid-term swing low, whereas VIX has not. Volatility of VIX is depressed. This is bullish for price and supports the new main bullish Elliott Wave count. And at the daily chart level as well, there was bullish divergence here between price and inverted VIX. It's been followed by upward movement, so it's considered to have been predictive. VVIX is moving lower, as is VIX, but VVIX is making new shorter term swing lows, whereas VIX is not. With volatility of VIX depressed, this divergence is bullish for price and supports the main Elliott Wave count. That's all from me at the end of the week with your S&P analysis. I hope all our members are looking forward to a fabulous weekend.